Hi guys, Raj here from Trading College. I'm just going to do a quick video with a few tips about trading psychology and really what we help people with and what we do really. So I'll start off with tip number one. Now, what I generally find most people struggle with is when they're in trades and they find that trades are fluctuating and they're struggling with watching the P&L when maybe they're in a winning position but the market starts to pull back against them. Now, first and foremost, this is completely normal and everybody goes through it, and it's nothing that you should really worry about. But what I would say is what we really try and do is a bit of a set and forget philosophy at the beginning. So if you're new in your trading journey, just take the trades, leave them alone, walk off, go and do something else for a little while. And then after a while, you see that it doesn't make a difference if you're there or not. And then you basically get a bit more used to it, and then you are able to sit at the screen and watch the P&L fluctuate, because you'll remember old trades that you've been in that have kind of gone up and down, but you've won, you've stayed in, and how close they would have been to your stop loss and how close they would have been to your target, etc. So that's definitely the first tip that I would give anybody that's new. Now, if you're a little bit more advanced in this and you're really struggling with your kind of trading psychology, I think a big thing that everybody struggles with is taking profits too early. There's no real answer for this. I mean, like Annie Duke, she wrote the book Thinking in Bets, absolutely great book. But she actually went and did some talks at some hedge funds, and she noticed that actually they were leaving more money on the table and losing more money taking their positions early than they were actually in their losing trades. And you just got to think about that. That's absolutely crazy. But the thing is what I would do is I would go back over your last 20 trades, look at the statistics of how far they would have gone, and then work out an average of where you should have taken profit, and then see if that works out in the future, maybe on a demo account or something like that. That's definitely something I would do for there. So definitely the first one, just obviously letting your trades run. The second one, knowing when to take profit and using previous statistics on working that out. Now, moving stop losses. I find that a really, really touchy subject for some people because there are so many right or wrong ways to do this. So let's say, for example, your risk to reward is 2 to 1 and you're risking £100 on a trade and you're aiming for £200 on a trade. So that's the scenario, okay? Now your trade goes £100 in your favor and you're feeling good and confident then. Do you move your stop loss from the minus £100 potentially if you lose to 0 because you don't want to lose any money when you're at the £100 stage? Now this is a really interesting question, and I also think it really depends on the time frame that you're trading as well. So like a 5-minute time frame or a 10-minute time frame or a half-an-hour time frame could be very, very volatile, and if you move your stop, it's quite likely you're going to get stopped out. But on the higher time frames, it's not really the same thing. The trends are a bit smoother, they run for a bit longer, so you might get away with moving your stop on those time frames. So once again, what I would do is just go over your statistics of your previous trades, look at that. If you did move your stop to break even at 1 to 1, how many of them would have stopped you out? So that's also a really, really good one. Now, another one is remorse, trader's remorse, missing trades, so FOMO. Everybody as well goes through this, and I think people listen to other calls from other analysts, or they look at other traders and think, well, what are they doing? This is also a really interesting thing. But FOMO, there's always another trade. You don't have to worry about missing out on a trade. If the S&P's running away, or gold's running away, or silver, whatever it is, oil, and you click that button late, that's going to change your risk to reward, and that's going to be really psychologically damaging if you get the trade wrong, because you know you've done something wrong and it's not been vindicated. But also the fact is that you know that there are other trades coming up. You don't have to rush trades. This market doesn't go anywhere. You just need to be patient, you just need to not worry, and you just need to go and look for another trade in the future. That's what I would say. So there are 4 tips there that I would kind of give you on trading psychology that could help you, especially if you're a new trader. There was one more advanced one in there, but that's fine. I think everybody's going to get to it at some stage.